The gold market set yet another big record this week. This week, gold went up about 3%. We ended just below 3,900. I believe we ended at 3,888. It went up about $30 on Friday, but only 3% for the week. A lot of that gain took place on Monday. The same goes for metal. Silver reached its highest level in 14 years. In fact, we finished above 48 for the week. Today was the intraday high. According to today's news summary, UBS has raised its gold and silver price predictions again. They say this is because investors are still buying a lot of gold and silver, and there is still a lot of uncertainty in the macroeconomy and in the political and economic worlds. The bank now thinks that gold will always hit $4,200 an ounce. It had earlier said that it would be $3,800 by the end of 2025 and $3,900 by the middle of 2026. UBS now expects silver to be worth $52 to $55 an ounce, up from $44 to $47 an ounce, which was their previous prediction. The bank's strategists say that silver has more room to overshoot because it is more volatile, and they still think the future is positive. UBS thinks that the gold-silver ratio will move closer to 76, which means that investors will want to buy more silver than gold. This optimistic view is based on the Federal Reserve's decision to cut interest rates again, the weakening of the US dollar, and rising budget deficits in big economies such as the US and France. The bank says that these imbalances are not likely to be fixed anytime soon, which keeps the situation good for real assets. This year, central banks are expected to buy 900 to 950 metric tons of gold, which is just a little less than the record amount set last year. As a way to protect themselves from risk, private buyers are also putting more money into gold. Gold and silver are still the main things that move the market. UBS is less sure about platinum and palladium, though, because they are still closely tied to industry demand. Still, the bank raised its price prediction for platinum from $1,200 an ounce to $1,350 an ounce, but warned that prices will likely go down in the long run. This new update from UBS shows that macro, political, and fiscal factors continue to drive demand for safe haven assets, which is keeping the fear of losing out feeling alive in the markets. With a price above 48.30, silver was up 4% for the week, even after a big drop. Yesterday on Yom Kippur, there was $1.02 an ounce sell-off during the day. I think a lot of that happened with low volume because silver went up early in the morning, above $48 an ounce, and then fell to $46 in just a few hours, a $2 drop. It was clear that they were skipping stops. Stops are when futures traders try to trade with a lot of borrowed money. They put in sell orders below the market so that if the market turns against them, they can get their money back. Well, I think that during the thin trade, when many Jews were not at work, they were able to take advantage and get rid of a lot of scalpers. That also hurt the mining stocks and, in my opinion, made it a great time to buy them. The GDX was up 3.2% and the GDXJ was up 3.7% for the week, but not nearly as much as you might have thought given the big moves in gold and silver. I think a lot of that was because of Thursday's shakeout, and I think some people were too afraid to buy these stocks today, which I think sets them up for another big rally. In fact, I think gold can go above $4,000 next week. It's only about $110 below that level. That doesn't mean much, and silver is only $2 away from $50. We may be seeing the last weekend when you can buy silver below $50. I told everyone on the Friday market wrap not to wait until Monday and to buy over the weekend. If you had taken my advice last week and bought on Friday night, anytime on Saturday, or anytime on Sunday morning or afternoon, you pretty much got the same amount of money back. But if you waited until Sunday night or Monday morning, I think gold was up $70. We had a big move, and silver was up everywhere. We're still building on what we did during the move, but I think the same thing will probably happen again. There's no promise, but I think a lot of buyers come out on Sunday. A lot of foreign buyers, and maybe even central banks buy some gold to start the week. That's why I would expect another big move, and I would just buy. Silver was up almost 4% at the end of the week, even though it dropped sharply yesterday during Yom Kippur trade. Early on, prices went through the roof and went above $48 an ounce. But within hours, they crashed to $46, a $2 drop in just one day. When stops are pressed, this kind of move often takes place. A lot of futures traders use borrowed money to put in sell orders just below the market price to stop losing money. Big players were able to take advantage of the holiday trade slowdown to get rid of speculators and drive prices down. The mining stocks were also hurt by that change. The GDX went up 3.2% over the course of the week, and the GDXJ went up 3.7%. Good moves, but not nearly as strong as you might think based on what's happening in gold and silver. After Thursday's wild swings, many buyers were hesitant to get back in, but this may have been a great chance to buy before another leg up. Gold is now only a little more than $110 away from $4,000, so it looks like it will try to hit new highs. If the current trend keeps up, this could be the last weekend to buy silver below $50. It's only $2 away from that price. When foreign buyers and even central banks enter the market on Sunday night, big moves often start the next day. Gold prices went up $70 last week, and silver prices went up over $1 before U.S. markets started on Monday. Something similar might be happening now. In other news from today, UBS has once again raised its predictions for the prices of gold and silver. The bank's previous goals for gold were $3,800 by the end of 2025 and $3,900 by the middle of 2026. Now they think it will reach $4,200 an ounce. It was predicted that silver would cost $52 to $55 an ounce, up from $44 to $47 an ounce earlier. That's because demand from central banks and exchange-traded funds ETFs is stronger, real interest rates are going down, and fiscal imbalances are getting worse across major countries. Also, they say that silver's higher fluctuation means it has more room to go up too far. The bank thinks that the gold-silver ratio will go up to 76, which will show that people want to invest in silver more than gold. The Federal Reserve's return to rate cuts, a lower US dollar, and big budget deficits in the US and France are some of the things that have made people optimistic. UBS doesn't think these problems will go away anytime soon. This year, central banks are expected to buy between 900 and 950 metric tons of gold, which would be close to the record set last year. As a way to protect themselves from US Treasury risk, private investors are also increasing their holdings.